Welcome back, everybody. Today we're going to do a deep dive into Happiest Minds Technologies.
Okay.
We're going to be going beyond just like what you see in the press releases and the headlines. We really want to uncover what's driving their success.
Oh, good.
So we've got a whole bunch of sources that we're going to be looking at. We've got the Q3 FY25 earnings call transcript.
Okay.
We've got the press release. We've got the investor presentation. And we even pulled their financial statements.
Wow, you went all out.
We did. We're doing a deep dive here.
I like it.
So by the end of this, you'll have a really clear picture of Happiest Minds' current state, their plans for the future, what makes them unique, what makes them stand out.
Awesome. I'm excited to learn more about this company. They're definitely one to watch in the tech world.
They are. And, one of the things that I noticed right off the bat is how they're handling all of the current market challenges.
Right.
Everybody's facing headwinds.
Yeah, there's a lot of uncertainty out there.
Exactly. But they're showing some serious resilience and strength in the numbers.
Yeah, their Q3 report was really impressive. 28.2% year-over-year revenue growth in constant currency.
Yeah.
EBITDA up 11.1% year-over-year.
Those are some strong numbers.
Yeah.
Especially when you consider that, we're talking about Q3, which is typically a quarter with some seasonal hurdles.
Right. You've got things like furloughs, fewer working days.
Exactly.
It makes those results even more impressive.
Yeah, it really does. I mean, it's one thing to just survive those challenges, but they seem to be actually exceeding expectations.
I think that's a key takeaway here. They're not just surviving, they're thriving.
Yeah.
And a big part of that is their ambitious revenue growth target.
Yeah.
They set a goal of 30% growth for the fiscal year.
Which is bold.
Very bold,
Yeah.
especially in this economic climate.
Yeah.
But here's the thing. They're on track to hit it.
Yeah, it really does look that way.
And when you look at their consistent 27, 28% growth in previous quarters,
Right.
it's clear that this isn't just luck. There's a strategy at play here.
Yeah, so let's dig into that strategy, because I think that is what's fascinating to me, is like, how are they pulling this off?
Right.
Well, they launched 4 major initiatives this year.
Okay, let's hear them.
All right, so first they did some acquisitions.
Okay.
Number 2, they created a generative AI business services unit.
Interesting.
I know, right? Very interesting. We'll talk about that.
Okay.
Number 3, industry verticalization. And number 4, a new chief growth officer focused on landing new clients.
Wow, so they're really making moves on multiple fronts.
It feels like they're setting themselves up for a whole new level of growth.
Right. And that generative AI business services unit, or GBS as they call it, that's a really interesting development.
Yeah, it really is.
I mean, this shows that Happiest Minds is serious about investing in generative AI.
It's not just like a little side project that they're doing.
Exactly. They're actually implementing solutions for clients.
Yeah.
And they're already seeing some really promising results.
Like what?
Well, they've delivered some projects, and they've got 15 more in the proof of concept stage.
Wow, and those are just the ones we know about.
Right. Imagine the potential revenue as those projects go live.
Yeah, that's a huge potential revenue stream.
Absolutely. They're positioning themselves as pioneers in this field.
I think you're right. Because, a lot of companies right now are really struggling to figure out, how do we leverage this generative AI?
It's a new frontier for a lot of businesses.
Yeah, so do you think this focus on AI could give them a real edge in attracting clients who are, they're eager to embrace this new technology?
I think so. I mean, a lot of companies are still trying to figure out how to leverage generative AI, but Happiest Minds is showing them the way.
Showing them the way.
Demonstrating tangible applications and results, and that kind of expertise is going to be highly sought after in the coming years.
I think you're right.
Now, what about that new chief growth officer? How are they doing on the new logo front?
It sounds like they're off to a really good start.
Good.
So they restructured their sales team, and they created a dedicated force to just hunt for new logos.
Interesting. So they're being very proactive about driving growth.
Yes. And this new structure seems to be paying off.
How so?
Well, they're already building a really robust pipeline.
That's encouraging to hear.
It is. But, we can't talk about Happiest Minds without addressing the big thing that everybody's talking about, which is the ed tech sector.
Right. There's been a noticeable slowdown in that sector.
Yeah, and they've got a pretty big presence in ed tech.
They do. So how are they handling that?
Well, in the earnings call, they acknowledged that the ed tech sector slowdown is impacting their growth in that vertical.
Okay, so they're not shying away from the issue.
No, they're not. And they even shared a couple of specific examples.
Oh, really?
Yeah, so one client decided to insource their work.
Okay.
due to a captive center strategy. So basically, they're bringing the work in-house.
I see.
And then another client in the K-12 space is facing difficulties right now.
That's understandable given the current climate in ed tech.
Yeah. And Happiest Minds is working with them to try to support them.
So they're trying to be proactive and help their clients through these tough times.
They are, but, it's clear that the challenges are real.
Right. So how are they mitigating the risks associated with this reliance on the ed tech sector?
That's a good question, and that's where their strategic diversification comes in.
Diversification is always a smart move.
It is. So they are tapping into the high growth potential of other sectors like healthcare and BFSI.
So they're not putting all their eggs in the ed tech basket, so to speak.
Exactly. And this diversification helps to kind of cushion the blow from any kind of prolonged slowdown in one particular sector.
It spreads the risk and creates more opportunities for growth.
Exactly. And, speaking of diversification, another thing they're doing is this Era banking platform.
Oh, yes. That's a key piece of their strategy, particularly in the BFSI sector.
Yes. And in fact, they mentioned in the report that they recently closed 2 significant deals.
Wow, that's great news.
Yeah.
Yeah.
So what makes this platform so special?
Well, Aura has the potential to be a game changer for Happiest Minds
Okay.
because it could drive what they call nonlinear revenue growth.
Okay, what does that mean?
So unlike traditional service revenue where, you're basically trading time for money,
Right.
they're looking at licensing deals with Aura,
Okay.
and those typically generate higher profit margins.
Oh, I see. So it's a different revenue model.
Exactly. And it's a smart move because it allows them to scale their revenue without necessarily having to scale their workforce at the same rate.
Interesting. So it's like they're building this platform once and
Yeah.
then they can sell it multiple times.
Exactly. And that's why they're so excited about Aura's potential.
Yeah, it seems like they're strategically positioning this platform to be a major growth engine for them.
They are.
Yeah.
They've even got dedicated task forces exploring new markets and use cases for the platform.
Oh, wow. So they're really putting a lot of resources behind this.
They are. They see Aura as more than just another product. It's a strategic asset with the potential to significantly boost their profitability.
Now, of course, none of this growth would be possible without a solid client base.
Right. Clients are the lifeblood of any business.
So what's Happiest Minds' strategy for attracting and retaining those big clients?
Well, they're focusing on securing larger accounts.
Okay.
They're not just going after any client they can get. They're being selective,
Makes sense.
and it's paying off. They already have 3 clients contributing over US $10 million each,
Wow.
and 7 more in the US $3-5 million range.
That's a healthy spread.
It is. It gives them a strong foundation for growth and stability.
Yeah, and it sounds like they're landing these big clients by offering really innovative solutions that are tailored to their needs.
Absolutely. They shared a compelling case study in the earnings call.
Oh, yeah?
A global parcel management leader chose Happiest Minds to develop a generative AI chatbot.
Wow. That's pretty cutting edge.
It is. And this chatbot simplifies data querying. So it's a real example of how they're delivering cutting-edge solutions for large enterprises.
That's really cool.
And let's not forget the success of their new Chief Growth Officer and that revamped sales team.
Right. All these pieces are coming together.
Exactly.
Yeah.
They're firing on all cylinders.
But let's get down to brass tacks here. How are their margins holding up amidst all this growth and investment?
Well, Happiest Minds has been remarkably consistent with their EBITDA margins.
Okay.
They've stayed within their guided range of 20–22%.
Which is good.
It is. It demonstrates strong financial discipline.
So what factors are contributing to this impressive margin performance?
Well, for one thing, they're benefiting from favorable foreign currency fluctuations
Okay.
and improved utilization rates.
So they're being more efficient.
Exactly.
Yeah.
However, they're also making strategic investments in their GBS unit and that new sales team.
Yeah.
And those investments offset some of those gains in the short term.
So they're prioritizing long-term growth over short-term profits,
Exactly. They're taking a balanced approach.
which I guess is what they mean by mindful.
I think so. They're not just chasing every dollar they can get. They're thinking about the long-term sustainability of the business.
Now, what about their investment in that GBS unit? Did they actually quantify it?
They did.
Yeah.
They've invested roughly 5 crores in GBS in the first 9 months.
That's a significant chunk of change.
It is.
Yeah.
It shows how serious they are about becoming a leader in the generative AI space.
Yeah, they're putting their money where their mouth is.
Exactly. And even with these investments, they remain committed to rewarding their employees with competitive compensation and benefits.
Oh, that's really good to hear.
It is. It shows that they value their employees.
Yeah, it's not all about profits. It's about creating a positive and supportive work environment.
Right. It's about finding that balance between financial success and employee well-being.
And speaking of strategic investments, they also announced a new acquisition, right?
Yes, they did. They signed an agreement to acquire the Middle East business of GPS Technologies Ltd.
So how does this acquisition fit into their overall growth strategy?
Well, it aligns perfectly with their focus on the BFSI vertical,
Okay.
and it expands their footprint in the Middle East, which is a key growth market.
Interesting. So they're really thinking globally.
They are.
Okay.
They're not content to just stay in one region. They want to be a global player.
And this acquisition gives them a local delivery team in the Middle East.
Exactly. Which is important for building trust and relationships with clients in that region.
Yeah, I bet.
And they're consolidating existing customer relationships in the region as well.
So it's a smart strategic move.
It is. And they expect this acquisition to contribute significantly to their revenue in the coming year.
So they're not just acquiring companies for the sake of it. They're looking for acquisitions that will actually move the needle.
Exactly. They're being strategic and selective.
It sounds like they've got a lot going on.
They do.
Yeah.
They're a company on the move.
This has been a really good overview. I think we've covered a lot of ground here.
We have. But we're not done yet.
We are not.
There's still more to uncover.
There is. In the next part, we're going to dive into their financial statements to really understand the story behind the numbers.
Okay.
We'll also examine potential risks and see what the analysts are saying about their prospects.
Sounds good. I'm ready to dig deeper.
Me too. So stay tuned, everybody. We'll be right back.
All right, so we're back and ready to dig into those financial statements.
Let's do.
Now, when I look at Happiest Minds' balance sheet, the first thing that jumps out at me is their strong cash position.
Yeah, they've got a lot of cash on hand.
They do. They reported 1,395 crores in cash and cash equivalents. That's a pretty substantial war chest.
It is. So what does that mean for them? Why is that a good thing?
Well, it gives them a significant advantage. It means they have the financial flexibility to invest in strategic initiatives without having to rely heavily on external financing.
So they can pursue growth opportunities as they arise without having to worry too much about raising capital.
Exactly. They can move quickly and decisively.
Makes sense. So they can invest in things like their generative AI business services unit and expand their sales team.
Exactly. They've got the resources to make bold moves.
Now, what about their debt? Are they taking on too much risk to fuel this growth?
Not at all. Actually, their debt-to-equity ratio is quite low, which is a good sign.
Okay, so what does that tell us?
It indicates a healthy financial structure. They've managed to keep their debt levels in check while still growing the business.
So they're not over-leveraged.
Exactly. They're being prudent, which is a good thing.
Right, because too much debt can be a problem.
Absolutely. It can limit your flexibility and make you more vulnerable to economic downturns.
So their low debt-to-equity ratio suggests they're managing their finances well.
Yes, and this conservative approach is also reflected in their strong debt service coverage and interest coverage ratios.
Now, I'll be honest, I don't really understand those ratios.
Okay, well, basically, these ratios tell us that Happiest Minds has a comfortable cushion to meet their debt obligations.
So they can easily make their debt payments.
All right, they're not going to be struggling to keep up with their interest payments or anything like that.
That's reassuring.
It is. It means they're not taking on too much financial risk.
Okay, so it seems like they're striking a balance between investing for growth and maintaining a solid financial foundation.
Yes, they're finding that sweet spot.
But I also noticed something else in their balance sheet.
What's that?
They have a significant portion of their assets tied up in goodwill and intangible assets.
Yes, you're right.
And I'm assuming that's because of all the recent acquisitions?
You are correct. Those acquisitions have definitely contributed to the growth of goodwill and intangible assets on their balance sheet.
Okay, so can you explain what that means for people who may not be familiar with those terms?
Sure. So goodwill basically represents the premium that Happiest Minds paid above the fair market value of the net assets of the companies they acquired.
Okay, so it's like the value of the brand reputation, customer relationships, things like that.
Exactly. And intangible assets are things like patents, copyrights, software, trademarks, those kinds of things.
So they're not physical assets, but they still have value.
Right. They can be very valuable, especially in a knowledge-based industry like tech.
Okay, so a lot of Happiest Minds assets are tied up in these intangible things.
Yes, and it's important to remember that these are non-current assets, meaning they're not easily converted to cash.
Oh, I see. So that raises a question for me.
What's that?
How can we be sure that these acquired assets are actually contributing to Happiest Minds' bottom line?
That's a great question, and it's one that investors should always ask when they see a lot of goodwill and intangible assets on a company's balance sheet.
So what's the answer?
Well, Happiest Minds has been actively integrating these acquired
Yeah.
businesses. There's streamlining operations, finding efficiencies, and leveraging their existing expertise to enhance the offerings of those companies.
So they're not just buying companies and hoping for the best.
No, they have a plan. They're being
Mhm.
strategic about how they integrate these acquisitions.
And that's important because poorly managed acquisitions can be a drag on a company's performance.
Absolutely. They can destroy value instead of creating it.
So Happiest Minds is working to ensure that their acquisitions are actually adding value.
Yes, they're being proactive, and that's a good sign.
Okay, so we've talked about their assets. Let's move on to their revenue
All
streams.
right.
Are they overly reliant on any particular client or sector?
That's another key question that investors should always consider.
Because if they're too dependent on one client or one sector, that
No.
could pose a risk.
Exactly. If that client or sector were to have problems, it could really hurt the company.
So is Happiest Minds overly reliant on anyone?
No. They've been working hard to diversify their revenue streams.
Good.
They're moving away from dependence on any single client or sector.
And how are they doing that?
Well, one way is by growing their number of million-dollar customers.
Okay, so they're spreading their revenue across a wider base of clients?
Exactly. They now have 3 clients contributing over US $10 million each,
Wow.
and 7 more in the US $3 to $5 million range.
So they're not putting all their eggs in one basket?
Right. And as they continue to grow their client base and expand across sectors, their revenue concentration risk should continue to decrease.
That's good to hear. But no investment is without its risks, right?
Of course,
Uh,
there are always risks to consider.
so what are some potential challenges that Happiest Minds might face in the future?
Well, as we discussed earlier, the slowdown in the ed tech market is a concern.
Right.
While they are diversifying, a prolonged slump in that sector could still impact their growth.
Yeah, that's true. And the tech world is incredibly competitive.
It is. There's always someone trying to eat your lunch.
So how is Happiest Minds differentiating themselves from both the established players and those smaller niche companies?
They're focusing on cutting-edge areas like generative AI and digital transformation.
Areas where they can really leverage their expertise.
Exactly. They're trying to be leaders in these high-growth areas.
And they're also differentiating themselves through their mindful approach.
Right. That's a big part of their brand identity.
It's not just about profits for them, it's about creating a positive impact on the world.
Exactly. They care about sustainability, social responsibility, employee well-being.
And all those things can actually be strategic advantages.
Absolutely. Because they can attract customers and employees who share those values.
Yeah, especially in today's world where people are increasingly looking for companies that align with their own values.
Exactly. So Happiest Minds' mindful approach could be a key differentiator for them.
Now, they also mentions some partnerships in their reports.
Yes, they've got collaborations with Microsoft and AWS.
So how important are those partnerships to their success?
They're definitely important because they give Happiest Minds access to cutting-edge technologies and a broader market reach.
Okay.
But it's important to remember that there's always some risk associated with partnerships.
Like what?
Well, what if those relationships were to sour? Or what if one of those partners were to be disrupted by a new technology?
So Happiest Minds needs to be careful not to become overly reliant on any one partner.
Exactly. They need to maintain their independence and flexibility.
Okay, so we've got the edtech slowdown, the competitive landscape, the reliance on partnerships. Anything else?
Well, we can't ignore the global economic uncertainties.
Right.
A significant downturn could impact IT spending, which would affect Happiest Minds.
Yeah, that's a risk for any tech company.
Absolutely.
Yeah.
And then there's the ever-present risk of technological disruption.
I mean, what if a new game-changing technology emerges that makes Happiest Minds offerings obsolete?
That's the million-dollar question. And it's a risk that every tech company faces.
So they need to be constantly innovating and adapting.
Exactly. They can't afford to rest on their laurels.
So we've covered their financials and some potential risks, but what's the overall sentiment? What are analysts saying about Happiest Minds?
Well, most analysts are actually quite optimistic about their prospects.
Oh, that's good to hear.
It is. They point to their strong financial performance, ambitious growth strategy, and focus on high-growth areas like generative AI and digital transformation as key drivers for future success.
Sounds like they're ticking all the right boxes.
They are. But of course, analysts are known for being balanced in their assessments.
So do they have any reservations?
They do. Some analysts express concerns about the edtech slowdown and the increasing competition in the tech services industry.
Okay, so those are valid concerns.
Yes, and they also caution investors about the potential risks associated with Happiest Minds acquisitions.
Things like integration challenges and goodwill impairments.
Exactly.
Yeah.
Those are real risks that investors need to be aware of.
So it's a mix of optimism and caution.
Yes, as with any investment.
It sounds like Happiest Minds is on the right track, but they also face some significant hurdles.
That's a fair assessment.
What's your overall take on their prospects?
I'm cautiously optimistic. I believe they're well-positioned to capitalize on the growing demand for digital transformation and generative AI solutions.
Okay.
But they need to navigate the challenges in the edtech market, manage their acquisitions effectively, and stay ahead of the competition.
So it's an exciting but potentially bumpy ride ahead.
That's a good way to put it.
So what should investors watch for in the coming quarters?
I would say keep an eye on their progress in scaling their GBS unit.
Okay.
The performance of their acquired businesses, their ability to win new clients and expand existing relationships, and of course, their ability to maintain those healthy margins.
So there's a lot to keep track of.
There is, but that's the nature of investing in a dynamic industry like tech.
Okay, so this has been a really insightful deep dive into Happiest Minds financials and potential risks.
We've covered a lot of ground.
But we're not done yet.
No, we're not. There's one more crucial aspect to explore.
And what's that?
Their commitment to sustainability, their unique corporate culture, and their potential for long-term growth.
Okay, sounds interesting.
It is. So stay with us. We'll be right back.
Welcome back to our deep dive into Happiest Minds Technologies. We've looked at their financials, we've explored their growth strategy, and we assessed their risks. But now it's time to talk about something really interesting.
Okay, I'm intrigued.
Their commitment to being a mindful company. It's something that's really woven throughout all their materials, their investor presentations, press releases, everything.
Yeah, that's definitely something that sets them apart. It's not just about profits for them. It's about purpose.
Right. They're not just paying lip service to these ideas either.
No, they're actually walking the walk.
Yeah.
They're deeply committed to sustainability, social responsibility, and creating a positive impact.
Absolutely. And we see that in their actions. Their focus on reducing their carbon footprint, promoting diversity and inclusion, supporting various social causes.
Yeah, and it goes even deeper than that.
Hmm.
What's really fascinating is how this mindful approach permeates their entire company culture.
Right. It's not just about external initiatives. It's about how they treat their employees, how they operate as a company.
Exactly. They really champion employee well-being.
They do.
They offer competitive benefits, and they foster an environment of learning and growth.
And they've been recognized for it, too.
They have. They've earned some pretty impressive accolades.
Yeah, like being named one of India's top 100 best workplaces and one of the best companies for women.
Those awards really speak volumes. They highlight Happiest Minds' genuine commitment to creating a positive and supportive work environment.
And this focus on employee happiness, it's not just a feel-good factor.
No, it's a strategic advantage.
Because happy employees are more engaged, more productive, and more likely to stay with the company.
Exactly. It's a win-win for everyone. Happy employees lead to happy customers, which ultimately contributes to a healthy bottom line.
It's a virtuous cycle. So this brings us to the big question. What's the long-term growth potential for Happiest Minds?
Well, that's the million-dollar question, isn't it?
Yeah.
They're clearly doing a lot of things right, but they're also operating in a highly competitive landscape.
Yeah, the tech industry is constantly evolving. There's always a new challenge around the corner.
Right. But I think Happiest Minds has a lot of things working in their favor. They're operating in a rapidly growing market.
Yeah, the demand for digital transformation and generative AI solutions is only going to increase in the coming years.
Exactly. So if they can continue to execute on their strategy, expand their capabilities, and nurture that fantastic company culture.
That mindful company culture.
Right. If they can do all that, I think their growth potential is significant.
Yeah, I agree. And their commitment to sustainability and employee well-being could become an even greater competitive advantage in the future.
I think so too. As more and more customers and employees prioritize those values, Happiest Minds will be well-positioned to attract them.
It's a smart strategy. So to sum it all up, Happiest Minds is a company with a strong track record, ambitious plans, and a unique commitment to making a positive impact.
They're not just chasing profits. They're trying to build a better company and a better world.
And that's something worth rooting for. So what's the final takeaway for our listeners today?
I would say that Happiest Minds is a company worth watching. Their journey is going to be fascinating to follow.
I agree. So keep your eye on them. And that concludes our deep dive into Happiest Minds Technologies. We hope you found this deep dive insightful and informative. But remember, the exploration doesn't end here.
No, it doesn't. Keep learning, keep asking questions, and keep exploring the world of tech.
And most importantly, stay mindful.